Hello, everyone. Welcome to the Index podcast, where the three of us come together every couple of weeks to discuss on-chain data, charts, crimes, and metrics that move the crypto industry. With me, I have Denning, on-chain corgi at Flashbots, Hildobby, resident data house elf at Dragonfly, and myself, that is Boxer, community powerhouse at Dune. Before we properly start this episode, we need to disclose that nothing we say here is legal, financial, investment, tax, or even life advice. The views expressed in the podcast are not representative of our employers, and we are acting independently of our respective professional roles. So with that, last week we all hung out at Denver. So maybe, Dobby, how was your week in Denver?
The week was awesome. I mean, it's really cool to meet like a bunch of people that you work with, close or not. Like the whole data community thing is like we're all connected, aside from our companies, and it's kind of cool to meet all those people. You guys as well. Then we also had like low points where we tried to book like the podcast recording thing, and we couldn't, and then so it was empty most of the week. So that was not as happy of a moment, but overall very cool week.
Yeah, I liked it. I had like a more packed agenda of like meeting the teams, and I didn't even go to the main venue until the last very day. I was like at the MEV side events. The one organized by Titan was pretty cool. There was like a heated panel of all the block builders on the stage, and like the moderator was asking unhinged question about, are you guys gonna launch a relay, etc. And there was like a photo taken by someone who was like, oh, that's 90% of blocks of Ethereum on the stage, which is like by 3 top builders. So it was quite interesting event. I learned about execution tickets by Mike Duder, like the new EPBS direction, etc. And also great to see y'all in the venue. Briefly, Dune happy hour was cool. Like a lot of the data people around there. Low lights was definitely like Denver sucks. I'm just a hater of Denver. It's so cold, and it's also like so dry. My nose was bleeding every day. Yeah, and it's dusty kind of. So
yeah, I don't know who like decided that Denver was the place we're all gonna meet at in February. It's really a strange. I think it just developed like this historically, but also like my lips and my nose, they were absolutely fucked. I've never had it this bad in my life. Like it was insane.
I think it used to be a small meetup with like locals there, and that's why going to this.
Crazy how these things go. I also like pretty good week. We had a Dune company on site at the same time, so I also like met a bunch of Dune people. We kind of aligned on product directions and stuff. But yeah, in general, it's like really cool to always meet wizards wherever you go. It's like, especially like as a Dune employee, you can just like walk around the conference with a Dune shirt, and somebody will go, "Oh my god, you work at Dune! This is amazing! I love the product." And you're just like, "Yeah, we're trying our best." It's always like quite a humbling experience.
So funny, like the very last day, I went to the main venue to meet Dobby. He said he was like working on his Dune dashboards, and then you and another Dune guy walked over. It's like, oh, you're a Dune user, and like, oh, it's Dobby.
Bernard and me, we were just hanging out, and Bernard like spotted from the distance, like, "Hey, this guy's working on Dune," and like turns out to be Dobby, which was pretty hilarious. Just a total coincidence. But yeah, overall, like really cool to also meet kind of the North American wizards. Like before, I mostly meet like the European and I guess the Asian people because they have like an easier time coming to Europe. But now I actually met quite a few people who are based in North America as well. So yeah, just real good times. The conference itself is like giant, and it was really interesting. Like for me, it's always like really, I have like a good time just asking questions and I going deeper. And it's like usually it's not really socially acceptable to just like ask like 100 questions. But like if the people are in the booth, they need to answer my questions. So like I have a really good time just like pressuring them and like asking not the nicest questions sometimes. But yeah, really engaging conversations, so you can really kind of load your brain with a lot of content, with a lot of understanding and kind of the vibes of the industry. So I think like while it is very time intensive and like your usual like work productivity really suffers in such a week, I think long term it's always useful to kind of go to these conferences like once in a while. So yeah, with our weeks in Denver covered, one big topic that repeatedly came up in conversations there is the Blast launch. And just to kind of recap, Blast launched their chain, or like they announced their chain in November 2023. So that's 4 months ago. And their initial chain, in quotation marks, was just a fancy multisig. So they didn't really have a chain. They were just like, hey, deposit your money with us. You're gonna get the native yield, which is the whole kind of trademark, or the whole pitch of Blast is they are developing an L2 which has the native yield for DAI or USDB, however they call that, which basically deposits stable coins into the Maker reserve module, and then they have Ethereum, which they deposit into the liquid staking module of Lido. And basically, up until February 28 or 29, this capital was just sitting around there. It was not like an actual chain, but rather it was just sitting in this smart contract multisig. And they had gathered an insane 2.2 billion in TVL. So that's pretty insane. So maybe let me share my screen real quick. Let's do this. So 2.2 billion in TVL. And for those just listening, we're now opening up DeFi Llama, and we're looking at a chart which basically just shows the pre-launch farm Blast TVL. And surprisingly, if we look at this in US dollar terms and in ETH terms, because ETH went up 70% during the time from November when Blast first launched to now. And surprisingly, if we look at the US dollar and the ETH chart, they're not that different, even though ETH went up quite a bit. So what that basically tells us is that continuously during the whole time this farm was live, people were depositing funds in there, which is quite surprising to me. I would have not expected this. Like I only looked at this data yesterday the first time, and very, very surprising that there's so many people who are kind of like not late to the party, but like in mid-December, or like at like end of December, they were like, let me like deposit my ETH into Blast, which is I can't really rationalize that decision. But in the end, like I think a lot of Blast TBL was big farming capital, so maybe it was just this was the best opportunity for them, risk adjusted, to deploy their capital in this yield opportunity. So I guess it's not really the retail users who are driving a lot of this, but more like the big farmer or like the professional farmers. So yeah, that for that. And then Blast finally launched February 28, I think. I wrote this down somewhere. Like 12 days ago. I wrote down 12 days ago, but not the date. That's pretty stupid. But yeah, so Blast finally converted to actually being a chain. They chose the Optimism stack, but they didn't choose to be part in the super chain. So yeah, maybe the super chain is if you follow certain methodologies or certain standards that the Optimism collective is kind of enforcing, so that all the chains are kind of interoperable in case they ever get to like a level where they can more easily do interoperability in the future. Blast did not choose to follow the superchain standard because Blast has made too many changes in their kind of core like mechanisms just because of the native yield and all of this jazz. So yeah, but they're still using the Optimism stack. So in the end, they kind of benefit from what Optimism has developed in the open source stack there. And yeah, in the beginning, there was like a bit of unclarity. There's a bunch of articles from Blockworks or from other news outlets where there's like, Blast has lost all of its TVL. But then what ended up happening is just DeFi Llama is only so DeFi Llama had indexed the multisig contract that was the bridge, or like that is supposedly the bridge. But it ended up that you didn't. So if you actually funds moved into a different smart contract, so it looked like a lot of capital left the Blast bridge, but in the end it just moved somewhere else. And now 12 days after launch, we are at 2.66 billion in bridge total value locked. So I think there's a net outflow of 50K in Ether. So I think the Ether terms here are more kind of like, that's the better metric to look at, because the market is sending so hard at the moment. So at the time the bridge or the pre-farm finished, we were sitting at 670K Ether in value. So it's not 670K Ether, but rather the stables plus the Ether in the bridge contract were worth 670K Ether. And now we're sitting at 650K worth of Ether, even though the Ether price has gone up. So nominally, they've actually lost 20K in Ether, but since the prices are all going up, the TVL overall has, like in dollar terms, has increased. So yeah, what does all of this tell us? And what is actually happening on Blast? So if you look at the Blast protocols, and for those of you just listening, we're still on the DeFi Llama page. There's kind of a lot of new names here. There's a few names which are kind of noticeable. I kind of remembered Wasabi from 2021. Like, this was like the peak DeFi yield farming era. I think I lost quite a lot of money in their pool too. So no good memories from me to Wasabi. But fair enough. And a lot of, like, there's not a lot of kind of reputable protocols deployed here. So there's no Uniswap, there's no Aave, there's no Maker. I mean, Maker is being used in the background, but Maker itself hasn't deployed here. And yeah, just a lot of new names. And I overheard some conversations at ETH Denver that basically what is happening is that a lot of teams they basically forked themselves, or they just spun up a new entity and are now operating under a new name in the Blast ecosystem. So if you've previously kind of had whatever, I don't want to put bad names on any protocol now, so I'm just gonna, like, I don't know, some like Uniswap V2 fork on Phantom or Polygon or whatever, they just have a new skin now, and now they're operating on Blast as, I don't know, Pack Finance or Orbit Protocol or Thruster. And I think sometimes the associations are publicly known, so they've actually kind of like, they've publicly said, hey, we're gonna do this, and like, this is like a project that the team's also taking on. But I think there's also like quite a few protocols of basically like, we're a new team, and since the old team, or like the team that was operating on, I don't know, Metis was Anon, they can just like sprout up in a new place, and this place is now Blast, and they're like basically rinse and repeating their, like, I don't know, they're siphoning grant money on Metis, and now they're kind of like farming the developer airdrop on Blast. But so that actually is a good, yeah.
In a way, it makes sense where, like, you're gonna, as a dev, if you're working on a now dead chain and you see this chain that's just launched with all this liquidity, and you have a chance to be like first mover, and you have like, there's like 50% of the upcoming airdrop or something going to protocols. So there's a good flywheel for a potential, potentially your protocol doing well there. And so I guess it's a if it wasn't doing so well in other chains, or if you just want to expand, there's probably a good rationale here. But of course, it's a degen chain maybe for now, and kind of a bet on its future more than anything. So yeah,
I agree.
People were saying like there are gonna be so many scams on Blast, but I'm not aware of what exactly. Are you guys aware of any like projects that's like scam on Blast?
I mean, why more or less than other chain launches? Maybe, I don't know, but I'm not really looking for scams, so I don't really know.
Let me open to some scam farms. Let's go.
There's definitely some like Memecoin was like a thing. There's few meme coins that launched and were announced prior to the launch of the mainnet. So maybe that's where it comes from, where it's like degen heavy, and therefore, if it attracts the degens, they'll probably have a lot of scams as a result. But yeah, I don't know if there's like much proven to that.
Yeah, I think so. So for those legit projects here, so if you're a Uniswap fork, or if you're Aave V2 fork or something like this, actually, I think the game theory basically plays out in a way that you are like, it's an EV plus action to just stay in the game and actually farm the airdrop legally. I think if you kind of weigh like committing a crime versus just getting money from the developer airdrop from Blast, I think that turns out to be the better decision in a lot of cases. And that's basically the whole play of last year. They've like tried to do like a good kind of Web2 inspired GTM motion, the same play that they did with Blur. Just rinse and repeat, or like not rinse and repeat, but basically evolve that playboy to be like, hey, we can actually like power a whole chain with this. Maybe put a little bit of innovation with the native yields on this chain, and now they're basically trying to get developers to deploy on this chain with a developer incentive program. And this developer incentive program is designed in a way where it's mostly kind of like not BD heavy, and like you don't need to like lobby for grants or something, but rather the smart contracts that are deployed on the chain and that are getting usage are actually just going to get airdropped the points, or gold, I think is like the internal name that they're using for this. So it is really interesting, where a lot of other chains are basically like they have this like very heavy BD process, and like you need to submit governance proposals and like do all of this stuff. Like basically like what Blast is doing here is like they're more or less employing this retroactive program where they're like, build something useful, make people use the contract on our chain, and we're actually going to reward you with the native chain tokens without like having like heavy BD or like all of this like bells and whistles that you or like hoops you need to jump through. So we'll see how this ends up. I think this is like Blur. It's like the founder, Pac-Man, whatever his real name is, I forgot. He's really keyed into this space. Like I think these are like he's like learned the lessons that like all of these other chains are painfully learning slowly, and like we'll see if this actually has attracted any useful builders or like any good builders. Maybe as a last aspect from the data side, even though there's so much bridge TVL, so bridge TVL is not like value locked on the chain, but rather just like how many stables and how much ETH is on the chain. They're place 8 or 9. So really impressive number actually. They've surpassed Optimism. And wait, have they surpassed Optimism?
Wait, in terms of L2s, they're like third, I think. If you just look at
total bridged
rollups. Yeah. Optimism, I think.
No, well, Optimism has more, but they've basically like they're in the top 10 of bridged TVL chains. So like that's super impressive for like a chain that's 12 days old, basically. So we'll see if actually something useful comes with this. What I can say for right now is that even though there's all of this TVL and like theoretically there's a lot of users, there's very little DEX activity, or like in general, like I don't think there's that much interesting stuff happening on this chain. So we will see how this actually turns out. I think users will kind of keep grinding for the points and for the airdrop. There's a lot of other interesting things happening at the moment, so maybe that's like actually kind of bad for Blast in a sense, because it's like it's not really the most exciting thing, and there's not like that, like the casino is not spinning as fast on Blast as of now. And like how do you get the casino over on Blast? So yeah, that's my short recap of what's happening on Blast. And yeah, really a big topic in Denver. Like I don't know, like lots of conversations which are like, is your project gonna deploy there? And like, is Dune gonna integrate Blast? And like, what is happening here? So yeah, it really has captured a lot of attention, which is like compared to all the other, like, I don't know, there's like so many L2s and layer ones who had like even like booth in the actually Denver, and you just walk past them and be like, whatever, another L2. And Blast has really like they like we're talking about it. They've captured the attention. They've captured a lot of rich capital. So yeah, we'll see how the story ends up.
Yeah, I feel like this chain is definitely gonna be more like a yield heavy or like speculation heavy chain. And like in East Denver, most thing I've heard was like it's gonna be a shit show because all the developer tools aren't even ready. Like a bunch of like devs complained to me about like even the node provider, like you can only use quick node back then using to deploy on Blast, but then the node doesn't even allow you to query per like block range specified, etc. So like it's just really a pain in the ass to integrate Blast, and seems like it was kind of like a shit show after the launch, but I guess it's live now. This morning I saw they were down for a few minutes after Duncan upgrade, but they're back now, so we'll see how it goes.
You confused me with this morning because for me it was like 2 hours ago, which in the middle of the afternoon I always forget. But
okay, my bad.
The like it's funny because I think they're the first one to have like native yield, and you have Manta that tried to pivot into doing the same thing in December. So like Blast had their reward program starting from November up until like 2 weeks ago or something, and Manta was like, okay, we're gonna front run them by basically doing the same program but even more degen starting in December and only making it last a month. So we launched prior to Blast. But I think it's like that. If you look on like L2 beat, you'll see like Manta is now number 4 behind Blast. But I don't know much going on Manta, which has launched a bit earlier. While I've heard more about things launching on Blast. So I'm just I don't know. I don't know what the reasoning here is. Maybe it's just like Blast has the bigger branding and was the first mover and the first one to do all this, whereas Manta was more of a copycat. But yeah, I'm just curious on how that plays out in the long term. I think native yield does make sense for the end user though. On a protocol level, it's not really how it was intended or how it was designed, but like, it makes sense to have the user not being diluted to death through native yield of Ether and stablecoins, especially since like the funds are often just sitting there anyways.
Speaking of L2s, I remember like a lot of people were talking about Bitcoin layer 2 as well at East Denver. So I think Dobby gonna like walk us through about some findings and data there.
Yes, so give me 1 second while I share my screen.
First of all, like I don't know why Bitcoin layer 2. My general understanding is that people think now there's capital flowing through Bitcoin ETF, and like people want to use Bitcoin in a more like easier way. Like you could use the WBTC on Ethereum, but it's not like they want the capital to be bridged off from Bitcoin. So there's needs of like using Bitcoin layer 2, and they are supposedly all EVM compatible, and that's all I understand.
All more or less. So I first want to roll it back to like the original state of like what was the first layer 2, which is Lightning, which isn't a layer 2 in how you would compare it to what you have on Ethereum. So it only is for transfers, but at much lower fee and everything. And you can see that usage it hasn't ever really been crazy high in terms of usage, but also it's been going down lately. So this has been the main known, it's like a staple of Bitcoin in a way, and was a big part of I think it was launched in 2018. So that was a big development for the chain. Then you had others come in, and one of them was Stacks, which also launched in I think 2018, and was you can compare it more maybe to Polygon, where it's a side chain more than an L2 that you'll find on Ethereum, much like optimistic rollups or ZK rollups. So technically, while it is like connected to the Bitcoin chain, it really can sustain on its own. And I think it's more of it's a state. It like tracks the state rather than the actual every transaction. Those are settled off chain. So that's why you are able to have much lower costs. And this didn't get much traction until maybe later on, where actual inscriptions came around and you could settle on Bitcoin and have actual proofs posted on Bitcoin. That's where it came through TVL. You also have another one, which you may have heard of, which isn't either an L2, but Thor Chain, which is another one, but it's a bit controversial. So the point of Thor Chain is to bridge native assets across chains. So one of the main ones being ETH to Bitcoin. The problem here that I'm showing is a tweet that shows that a lot of the transfers are used basically for kind of like scammers moving across chains to obfuscate where the funds are headed. So that's just one thing. Is just that there isn't any check. You're not going to get censored. So it's just an easy way for anyone, including of course bad actors, to bridge off of Ethereum onto Bitcoin and just keep shuffling funds until hopefully you've lost the white hats trying to track you, I guess. or you move first onto the exchanges before they're able to alert them and say, hey, like, can you block these funds? So that's just an unfortunate development, but that's ThoughtChain. I don't know if they've done much work there, or if they've actually iterated on ThoughtChain in a way to make it like, it's hard to have permissionless chain that also prevents bad actors. But I don't know, maybe there's something there to be done.
This is basically the tornado like thing repeated, right? Where it's like, are you really trying to like be permissionless, or are you, I don't know, do you want to prevent North Korea or Russia to like use your protocol? And that's like, it's a really like a hard philosophical debate and question, but like I wouldn't, I don't know, ThoughtChain doesn't seem to give a fuck. Like, I haven't seen any communication from them being like,
no, it's like
we're gonna like implement
volume.
like censoring or whatever.
Yeah, it's like they would lose most of their volume if they prevented this. So it's kind of like, it's hard to, which side do you choose? Do you choose being greedy, or do you choose being right? And I guess they chose the first one for now. Maybe that changes. And then you had another development that you've heard about, which are ordinals. So ordinals are, in a way, roughly to put NFTs on the Bitcoin blockchain, but really it's inscription. So you are submitting JSON packets on Bitcoin, to put it simply. And the major difference is probably that the metadata is going to be posted on the Bitcoin blockchain straight away, rather than being off-chain like on other ERC 721s and ERC. And what I want to show here is how actually some of the, if you look in the top few, some of the more prominent NFTs overall in terms of market cap, although, I mean, for more illiquid tokens, market cap isn't necessarily the best metrics, but I guess it's the best we have probably. You can see that like Node Monkeys here is like second to Bored Apes, and if you look throughout the top 20, you'll see quite a bunch of Bitcoins in there. So it is a prominent chain. There's almost, there's like probably fewer Solana ones than Bitcoin ones, for example, which I would have guessed the opposite. But I think this comes from Solana. We have more public access to like Solana data, whereas Bitcoin usage, especially ordinals, I know little less on the data, and also because usage of the Bitcoin ordinals seem to have stemmed from the Asian side of the world. So we probably didn't see it coming as much. So yeah, that's another thing. And if we look overall, sorry.
What if you click on the number of owners of the ranking of this NFT?
Number of owners, yeah, there's fewer for Node Monkeys, so I guess it's not as spread out, but also those are younger. So, supply, like, holders tend to grow over time. So maybe this is just an impact of them being younger relative to Bored Apes. Honestly, I don't know the dynamics exactly of holders on Bored Apes and Node Monkeys. Maybe there's something there. I honestly don't know. But yeah, it's probably more whale heavy on Node Monkeys. But if you look, maybe how could
can we quickly put in plain words what we're looking at here? Was this the last 24-hour trade volume of NFT collections?
This is based on last 24 hours. Let's look at 30 days. 30 days, I put 24 hours, but it roughly looks the same. Even more skewed towards Bitcoin, it seems, if you look on 30 days.
Okay, so just to put this into
ones then.
Just to put this into plain words once for anyone who's not looking at this website. In the last 30 days, ordinals related collections or like NFT collections on Bitcoin are taking up maybe 10 spots on the top 20 leaderboard of NFT volume in the last 30 day in nominal volume, or like volume in US dollar.
Yeah, exactly. It doesn't necessarily mean, I think volume, it's hard to find a good source again for like ordinals because it's hard to track it. But I think volume is comparable to Ethereum mainnet volume, but it overall isn't much higher, but it is higher in terms of I guess what high value NFTs are going to be more prominent over there. And also because I think Ethereum overall hasn't moved all that much for NFTs lately. In volume, it's been relatively stable. It's grown like slightly, but relative to previous 2021 highs, it's much lower. We're yet to even come close to those. And I think the biggest price moves have been like Pudgy Penguins moving up over the past 3 months, and then over the past month with Ethereum going up, most of the NFTs have gone down because I'm guessing people are exiting to get the native assets, and also maybe it remains somewhat stable in USD value. Those are mostly guesses, to be honest. So it's just that Bitcoin seems a lot more active lately in terms of NFT trading than Ethereum, which is surprising.
Could we maybe say that like the NFT cycle, or like there's an NFT cycle happening on Bitcoin just because they don't have access to shitcoins? Like it almost that like there's like so many meme coin and shitcoin trading happening on like Solana and Ethereum, and I think like on Bitcoin, like even if we look at this list, there's like some BRC20 related NFTs or something. So maybe this website just groups them weirdly, and like they're actually just fungible tokens and not really non-fungible tokens. It's a weird thing, but like it seems to me that almost like the meme cycle in Bitcoin is more like happening on the NFT side rather than on Ethereum and Solana, where it's on the like fungible shitcoin side.
Yeah, I agree. I think it's it's not as black and white as on Ethereum, where you have a clear cut between the two. So there's definitely some of this because you just can't have shitcoins on Bitcoin. ERC20s on Bitcoins, I guess. So yeah, there's definitely this. But what I wanted to get at with this ordinals, I didn't really want to talk about ordinals themselves. It was more about like ordinals was the first practical application of inscriptions on Bitcoin. But with those actually came other applications, which are rollups. Rollups. L2s, which can mean a lot of things, but the main two L2s on Bitcoin, which if you look at like TVL, now Merlin is at like 2.1 billion in TVL, but I think I had it there. In total, if you include the ordinals that bridge on there, there's almost 4 billion on there, which is quite a lot. And you also have B squared, which is another L2, but this one is yet to launch. I think the difference between the two is Merlin has launched and is on mainnet, whereas B squared is still on testnet, and Merlin is currently in its it's like farming program where people are essentially mining the main governance coin that'll come later, that is called Merl, basically. So that's also why the high TVL. I think one interesting thing is the reason these are able to grow so quickly, so to such high TVL. I mean, if you look at like the TVL chart, it's kind of insane, that spike, how it basically it started in like February, and like over a month it's gathered like substantial amount of money. And that's because Bitcoin is just full of like very dormant capital that's just sitting there and doing nothing. So you might as well bridge your Bitcoin. If you're fine with the risk factor of bridging it, you might as well bridge it to farm another token. If it wasn't doing anything else in the first place. In that sense, it does make sense if that's your goal. But yeah, we'll see how those develop. I think one interesting factor is if we look here. So here are the two recent raises of Merlin and B squared, and I looked through all those VCs because I wanted to see where they were based, and I think it's a really good proxy for where interest is. And basically all of those, there's like 80% based in Asia. There's only like Uphonest is based in California. Two of them are based in Qatar, two in Seychelles, in the Seychelles. yeah, and then like one in London, and the rest is all Singapore, Tokyo, Hong Kong, Beijing, Seoul. Yeah, it's basically very concentrated over in Asia. So that's probably why I mean, it seems very distant from us, all this.
Yeah.
Maybe I don't know about you guys. Do you guys hear a lot about like Bitcoin L2s, or is it more something like you don't understand? Like,
Yeah, I think it kind of all makes sense because the first time when I heard about Bitcoin Layer 2 was when the Asia people were talking about inscription. And inscription was like really hot in Asia, like, and there was so many like trading and like look into like Bitcoin Layer 2 MEV like ahead of time. So I think it's all like chained together from like the inscription, ordinals, and now there's Bitcoin Layer 2, yeah.
yeah, exactly. It also is related, and it's basically this. It's kind of like it feels similar to BNB maybe, where it's another chain that I don't necessarily understand all that well, and it's heavily tied to Asia. But yeah, I don't know. It's interesting. I'm definitely curious to see how those things develop. For now, for context, those are like just settling ZK proofs on Bitcoin through inscriptions. So that's the only thing that really makes them layer two. So there isn't. It's not. You're not going to have optimistic rollups, but like on Ethereum, you can have those. But you have EVM compatible chains. And in fact, there's even one of them where people have proposed to deploy Uniswap v3. The chain is called Rootstock. It's a side chain, so kind of like Stacks, but it is EVM compatible, and people are already looking into deploying existing Ethereum protocols on Bitcoin L2s, which I thought was pretty interesting. But now this is all, very, very much like in the proposal stage. I don't know how the integration actually looks, how usable the chains are. I haven't played around with them. I think this will take a bit of time before we're past like the farming stage, and where like we actually see actively used protocols on there. But it's probably worth keeping an eye on.
So I have a question. So these are Bitcoin layer 2, and so do they submit the confirmation batch back to Bitcoin? I guess Bitcoin chain. But I
Well,
guess there's nothing you can submit in Bitcoin chain
Yeah.
rather than value transfer. So how is it attached back to the Bitcoin, say consensus security or whatever?
It's just a ZK proof that's batched like a batched a batch hash of like transaction posted as inscriptions. That's basically it. That's all there is to it. It's really, I could technically deploy an L2 if that's if
So you
those are
mean the chain will submit transaction with inscription back to Bitcoin chain?
yeah.
Okay, got it.
Yeah.
I see.
Instead
But
of sending
in
the
the
proofs with
in the same field that people do inscriptions now, they basically just post like either the ZK proof, or I guess you could also post the raw call data the way that Optimism, like the optimistic proofs do it today for Ethereum.
Yeah, I think it's only ZK proof for now, and there isn't anyone posting call data.
Not anymore, not call data anymore. Now it's blob. So
Well, get with the times,
as of an
man.
hour ago. But basically, these are independent chains, and the only there's no decentralized validator sets. It's basically the same kind of like decentralized theater that we are seeing on Ethereum chains. It's like we are roll up, or like we're using the security of Bitcoin, and in the end, all they're doing is like they're posting data on mainnet or like on Bitcoin mainnet.
It's like inscriptions where the main thing is the narrative, where it's on Bitcoin and that's the biggest chain, regardless, it's the first one. And that is bound to attract people regardless of what we think. Because we think like this being in the space, but like people outside of the space may see this as like, oh, I'm going to use the application that's on Bitcoin because that's the biggest chain. And I don't really care what the hell is going on behind the scene, as long as like I'm told it's secure, I guess. I don't know. But it'll be interesting to monitor how those develop. But I think, and this dormant capital as well, which you don't really have on Ethereum, because you can already, you have on Ethereum, but you can already use it on mainnet for all kinds of things. That can't be done on Bitcoin. It's just sitting there. So you have funds that maybe you'll have like yield bearing stuff on L2s, and that's already a huge thing for a huge unlock for anyone having capital sitting on Bitcoin.
And are they mostly optimistic rollup or like ZK or a
ZK,
mix of both? Okay.
yeah.
And I saw that there's like wormhole bridge that if you want to like interact your assets between EVM chains with them, you can bridge it over anyway.
Yeah, that is possible. I don't know. If you say so, I trust you. But yeah, I'm guessing
Yeah,
there's
I saw
bridges
that from your
starting to pop
screen
up.
just now. So
Oh, really? Wait, what?
Yeah, that was in the Uniswap governance proposal.
yeah.
There's also T Bitcoin.
Oh, yeah, you're right. Yes, sorry. Yes.
There's also T Bitcoin, which I talked to them at ETH Denver. They actually have a trustless bridge on Bitcoin. So it's kind of like not really a smart contract, but it's a wallet that is managed by a federated validator set. And they have a kind of trustless bridge to kind of bridge your assets natively from Bitcoin, the network, to another chain. Also quite interesting, and I guess an alternative to Wormhole.
Yeah, it is flourishing. There's even like restaking protocols starting to pop up on Bitcoin. Like it's going wild.
It's just repeating all the narrative hype in Ethereum.
Yeah, I think
it's an easy playbook.
Maybe it's a good career decision to go over to Bitcoin. Like everyone's gonna think, oh man, this guy's so smart. Like all you're doing is like repeating the ETH playbooks. There's people out there who are farming this like career wise at the moment.
Yeah.
With that out of the way, I think what I'm observing over the last couple of weeks is like kind of a split in the market where like on the one hand we have like institutional flows, which is like Bitcoin ETFs, and then on the other side there's like a lot of like meme coin craze happening, and that's mostly focused on Solana. So maybe Dobby, you've been posting these great updates on Twitter regarding the Bitcoin ETF, since you're kind of like the guy to go to for this data. So maybe if you could give us like a high level take of like what you see, and then Denning, you've kind of participated in the Solana meme craze. So maybe if we can see both sides of the trenches here. I think that's like a really interesting contrast or comparison that we can draw here.
Dobby is the official Bitcoin guy for our podcast, and I'm the Solana girl now.
Damn. Okay, times have changed. Bitcoin ETFs have been interesting. So if you look at how ETFs are traditionally being reported, they're just reported based on numbers reported out of like Bloomberg Terminal and everything like this. The difference here for Bitcoin ETFs, which as a reminder launched on January 10th, they were approved by the SEC, and one of them was the Grayscale Bitcoin holding, which was converted into a Bitcoin ETF. And since then, I've been looking into the flows, and my goal was, instead of looking at reported numbers, I wanted to look on chain and actually snoop around and see, okay, which addresses are holding those, trying to track the actual flows on chain and ensure that, because I think those are more interesting based on, that's just what I like to look at. And, looking at on-chain flows also adds more context. You can see more metrics. So there's all kinds of things that are interesting here. So the main thing is going to be the flows themselves. Here you can see how the 10 different ETF issuers have been seeing flows over the last few weeks. You see how originally you had like high Grayscale outflows and maybe somewhat high launch inflows for the other ETFs, which slowly dwindled. But then over the past weeks, they've been back up quite a bit. And in fact, I think there's like quite a few that are seeing like record numbers lately. So Fidelity is one of them with recent really high numbers. BlackRock also saw really high numbers. And like BlackRock's just yesterday, so the flows happen on chain the next days. They're settled one day after being traded. That is according to the SEC's ruling, where you have 1 day to settle it. So just yesterday there was 800 million and so much for BlackRock, which is its all-time high again. So it's kind of crazy to see for an ETF these high flows and continuously breaking all-time highs just a few weeks after launch. That really rarely happens. And for context, we are now at 58 billion. which is a little over half that of gold ETFs already. But as a reminder, a lot of it comes from Grayscale, which had a lot of Bitcoins in its Bitcoin trust that was there for a while prior to ETF being approved. If you look, they had like 600,000 Bitcoin. They've sold off a lot of them. So now just under 400,000. But interestingly, in terms of USD AUM, they're almost break even from the start just because of Bitcoin's price going up over time. So technically, they're just earning as much fees as they were on launch day, which I think is like the highest at like 1.5%. So they're doing very well over there. And so far, 1% of Bitcoins have moved into ETFs, which is like, I think, way out of people's expectation. And that's also what has driven a lot of the price hike recently. If you annualized that number, so currently there's like 4% backing ETFs, 4% of the Bitcoin supply. And if you annualized the past 2 weeks of flows, roughly 8.2% of Bitcoins would be absorbed into ETFs, which is really, really insane. It's like it has the impact of the halving from not the previous one, but the one before. So it's quite a wild impact on supply, and why that is hasn't been seen in a very, very long time. So yeah, it's kind of interesting. It's kind of cool. There's also, we talked about it previously. There's rumors of the ETH ETF happening sometimes this year. The first deadline is end of May. I think now that like speculation is around 20% of that happening because not much has happened on it, and we're just a few weeks away. The other next deadline is going to be in August. This one has a higher probability, obviously, because it's further away, so maybe things will have moved by then. But yeah, it'll be interesting to monitor if like the same happens on Ethereum.
Say the 8% number. Did you consider the happening in April?
This is just looking at ETFs. So if you only look at ETFs and the flows, so if you the past 2 weeks, if you look at, I guess, those numbers here, the past 2 weeks, and you spread the 2 weeks onto a year, you would see that 8% is being absorbed into the ETFs. Does that make sense?
Like you're saying it's Bitcoin supply percent absorption. So it's like your denominator is total supply of Bitcoin, right?
Yeah.
So then,
but
like,
I am factoring. Oh yeah, I am factoring. I am factoring all the consideration. I have like the model of how the supply is going to look over time, and it's factoring all this. I see your question.
It's also kind of interesting to see this like daily bar chart, and it's every 5 days there's a bar, and there's like 2 days missing, and there's 5 days. Like they're still operating in the boomer banking way, like only 5 days.
You can even. I've now also started to know a lot more about when banking holidays are in the US, because if you see there's a 3-day hole in the middle, that's because there was a it was like President's Day.
Oh, you're right.
I mean, and so that's interesting. It's a big throwback to the old system, but it's cool to see it. Like I think it's kind of cool to see this kind of bridge between TradFi and crypto. So yeah, that's what stemmed this analysis. It is kind of maintenance heavy because every day I need to look into. So maybe I can show for quick context how I look through it. I know that so BlackRock for now, right after this podcast, I'll be looking into where those 800 million come from, and I've kind of familiarized myself with the patterns and how Coinbase custody handles them. And you can see how they tend to increment by round numbers of 600. So these are the wallets I've tagged from yesterday. But if you look at today, you'll see, those are still yesterday. Do I see any with 600 and not tagged? Okay, maybe they haven't popped up yet, but I'll eventually see some with like 600 and I'll know that those also all are funded through the same Coinbase custody address. And there's a pattern to it, so that's how I identify them. But it is very manual, and I'm up to right now. I'm just under 3,000 addresses overall that I'm tracking throughout all the issuers. But my goal is to force those issuers into disclosing those addresses and proof of funds, because at the end of the day, my goal isn't to dox everyone at all. My goal is here doing so because there's actual investors behind and who have custodied their money through them. So you might as well leverage this whole thing the blockchain enables, which is transparency. And if you look now, there's only 21 shares has shared a proof of fund. So I'm tracking 37,800. There should have so these are the flows from today. So there's probably 1,000 or so Bitcoin that moved today as well. But otherwise, we're in the same ballpark. When I'll have updated, every day I check that I'm on the same number, and I am.
I have a question.
Oh, wait, yeah, I forgot to share. Here's the tab.
Was all these addresses you labeled? Are you able to label who are the top holder of Bitcoin on the chain?
It's an individual. I know how to label BlackRock now because they have a similar pattern, but each of them have a distinct pattern in how things are done. So for now, it's all in my head. I know what I'm doing because I've done it so much that now I know what I'm looking for. But the original idea is you have so many people who are moving these high amounts on chain. So already that singles out so many wallets. And then from there, you're just looking for a set of addresses that matches roughly the reported number. The only problem is that the reported numbers are going to be in dollars, and they're going to be in dollars, dollar denominated based on the Bitcoin price from yesterday. So I look at the average price of Bitcoin yesterday during trading hours, the average price of today, and then I do what is the ratio between those to get a sense of what I'm looking for.
Yeah, but my question is are you able to tell people, reveal what's the top 10 Bitcoin holders, for example, because I've heard U.S. government and China government are on the top 5 holding Bitcoin, which
I think Arkham should have this because they're regularly when they shared their grayscale sleuthing thing where they found all their holdings, I think back in September. That's when they discovered that they are actually in the top 5. I can't remember exactly. One of the top 5 holders of Bitcoin, and the first one to actually, associate all those holdings to one single entity, because it's so spread out across the reason why there's so many addresses is because Coinbase custody spreads out their holdings by chunks of 1,000 Bitcoins or something. And they also regularly shuffle them. So every 2 weeks or so, BlackRock is going to remove all their addresses, move to all new ones, and is really annoying, but that's how it works. It's just, I'm guessing it's for security purposes, of course. That makes a lot of sense, and you don't want to have everything held in one address. And I'm guessing they have systems that are put in place to handle all of this for them. But it's interesting to reverse engineer these systems and try to understand why and how those work. There's definitely a lot more work to be done there. Even if you look at if you follow Arkham on Twitter, you'll see them regularly doxing new high entities. I think they recently did maybe the British government and maybe the German one or something. And there was the biggest Ethereum traded product that was finally found on chain today or yesterday in Europe. And that's also a very, very big holder in terms of Bitcoins. So, there's a lot of stuff to be done in terms of labeling. And labeling in the open source side is still a very lacking thing. There's a lot of work to be done, and I think we can collaborate on this idea a lot more.
Show you guys a bunch of ridiculous meme from the Solana side of casino. So I guess, are you guys also trading on Solana or at all?
I
Yes.
got the Sega phone.
The original one or the second one?
Did you
The
get the
original.
bump token?
Okay, okay, you are you're OG. Yeah, I've also started trading on Solana, and it's a really nice experience in comparison to like what we had to go through last cycle with like Ethereum. I don't know. It is like all this bridging and all this bullshit, and on Solana you can just, if you want to ape, you can ape, and transactions are basically free. It's really a very smooth experience, and it's a great casino.
Yeah, I think it's definitely a better experience, but there's still like problems that are very different to the ones you're going to see on Ethereum, where revert rate, for example, is going to be much higher, and you're gonna have a lot more failing transactions and stuff like this.
Yeah.
But I'll let
Set your slippage
Dan show us. Yeah. There's a whole topic there. I'm sure Daniel is going to cover this.
Yeah. I've experienced everything you guys mentioned like last week. So like disclaimer is that I'm not really like degen trader, but like it was my first time a week ago. Because just like I have some degen colleague around me who was telling me about the block token and then like the WIF token, the dog with hat token has been going up. And then so I guess it started as I think I started maybe end of last year. I went to a few like meetup in SF, and people were like, "What's your New Year prediction?" And people were like, the new cycle comes up. Solana will always have its narrative as in the cheaper chain, was like better, higher throughput, like yeah. So I bought a bunch of like bonk back then, maybe 5,000 bonk, and I held it for like 3 months, kind of forgot about it, and then until last week, my colleagues were hitting me up, and I was like, "Oh shit, my bonk went up to like basically like 3x," and so I sold it, and he was like, "You should buy this token called Retardio," and I was like, "What Retardio? It's a funny name, but it's like it's really funny, like on a meme, and you see this thing was, and it's kind of." But it's kind of too bad. It's like it says it did it 9/11, and like there's a lot of like interesting meme, but we were like, this token not gonna be listed on Coinbase, so the potential is limited, And when I noticed this token, it was already going down. But then the next one, my friend told me was like, "Oh, you should get on Joe Biden." So Joe Biden, as in like misspelled from Joe Biden, and like this is like I don't know, it was like this racked face. Was apparently is like how does it mimicking the politician, and then also like a lot of good memes and um so I got on Joe Biden, and then like 12 hours later it's like 4x, and I was like, oh shit, let me sell it. But then like so many problems of like when you're holding I only bought 2,000 and it become like 8,000, and it's like already a really big whale size, so I wasn't able to sell it with like slippage threshold like set to 0.5% as default on Jupiter aggregator. So I had to like broaden it to 1%, sell it in 3 trades, pretty much like a manual TWAP trade. And but it was you will not get the price you see because there's price impact, there's slippage. But I was still very happy. Like I think I ended up with like 6K or something. Actually, I think 4,600. Yeah. And then the next one, and so after Joe Biden, I discovered this whole like Solana starter kit. So like you would want to trade on Jupiter aggregator, right? So because the aggregator will help you to get liquidity across like Raiden, Orca, and different AMMs. And then in the Jupiter aggregator, interface, they link this particular tokens specific like basically token contract or program address, and they link you to Bird Eye. So I got into this basically Bird Eye interface, and this which is I think is like where all the degens, people who are using UI looking at. And like I started looking like spotting some tokens like 2,000 like 20,000% up in 24 hours, and I starting to click into all those like tokens. Like for example, this one is Alex Jones. So apparently the same family was a Geo Bowden one. It was the same PFP thing, and I discovered a bunch of like token which was just 2 hours fresh, and I was like, oh okay. I found one that's called Baby Whiff, and so I was like, oh, this is a nice one because whiff is kind of really too high. So like like I know like when you're doing ape degen trading, you don't really care about the fundamentals, but you still look at some numbers, like for example like the market cap. So you know like the Doge and the Shiba token, those meme how to say, the mainstream memes are all around like 2 billion or 20 billion. And then one, when I checked, I think the WIF token, it was around already 2 billion. So I thought it's like really pretty high. It's kind of too high. And then when I found this token baby WIF, it was around like only 2 million. So I was like, this token gonna go up, just, you know, proportionally related to WIF. So I bought it around maybe like 0.003, and it went up in 2 hours to almost a cent. And so it's like 4x basically, or 3x within like just a few hours. And I hold it slightly, and then I sold them like when it dropped until like 0.009. And I saw my trade of 6,000 literally like cost like a big dip right there. Like you see all these trades are, a lot of them are only like $100 or like few dollars really. And then like I was really lucky, I got out of it. So after that it has been dipping like much lower. And like one thing you want to know, keep attention to is like you want to join like the Telegram group chats and see if it's popping. And a lot of those chats are like actually now have like a bot plugged in showing like all the buys. They don't show the sale. They only show the buy in the Telegram group chat. So it's like so bullish, you know, like, oh, another baby whiff bought buy of 20K or like 2,000, etc. And like the more you degen into these tradings, like you get so much pain about like you can't sell, like it reverts all the time. Phantom actually, as a wallet, they provide a simulation before you submit, which is great, which has been like pretty accurate. Whenever I see there is a revert in a simulation and I still submit, usually gonna revert, which I think is basically simulating all the, you know, the slippage are gonna come from. And so yeah, the next level would be like instead of using the UI on those aggregator interface, you would want to use like the Telegram bots. So like for example, in Bird Eye interface, they have this Unibot button. They have BonkBot, which is a Solana Telegram bot. Banana Gun, which is a big Telegram bot on Ethereum, is also on Solana, but I think they said it could be sometimes buggy. They're still gonna like improve it later on when they have bandwidth, etc. So yeah, I mean, anyway. So and then there's like a series of meme token after Joe Biden came up, like Martin Luther King. I have a dream, and the meme is like Martin Luther King in that PFP format and with like a Lambo. So that, you know, I have a dream about Lambo. and then there's this one called Elizabeth Warren. So basically, like the politician, you know, like crypto relevant celebrity, etc. Phantom Wallet posted about like a list of meme coins, and the Elizabeth Warren account was like, you have to add this girl, and they were like, yeah, interacting, etc. It was quite funny. I saw another like overheard tweets. Well, Hasib also had a tweet about like all these like, you know, meme coin was like some animal with, you know, they misspell with as WIF, so with was like, you know, like all the genital parts of human, so like wolf with balls, etc. Just turtle, I don't even know what that is. There
I
was
think
a,
that's supposed to be Justin Trudeau, the president of Canada, I think.
okay.
This is pretty wild.
Yeah, and there was more like a like overheard tweet I saw, like people were talking about Michael Jackson, so which I think is Michael Jackson. And then there were also like Brown Armstrong, which is like, you know, Coinbase CEO, was misspelled. Yeah, it's pretty wild. But people keep buying these things. There was definitely also a bunch of like data coming up, you know, like the whole Solana meme coin thing has definitely how to say, bring up the whole usage on Solana. One chart here is showing like the total amount bridged basically per chain, and Solana is now like taking over compared to all the other chains, like pretty much number one. Compared to the second would be Ethereum and then Arbitron. But there are also a lot of like chart crime, I would say. For example, like people are saying, oh, there's all-time high of all the Solana wallet addresses, but like really, like it can be so easy that this metrics to be gamble, and like you can deploy all the new things, and all the new token addresses will be like a new, contract address. And so it doesn't really say much, and especially if you're comparing that with other chain, it's saying like more usage, and it's saying like non-voting user transaction, more transaction compared to Ethereum, Arbitron, and all the other chain combined. But so are you counting all the transaction, or are you counting successful transaction? There could be like such a huge spam amount of transaction if it's having like high revert rate as well. So
also maybe if I can jump in quickly, it's also like the transactions in Solana are virtually free, and like I think there's like a whole new kind of meta of meme coins on Solana, which have like they're basically like speed running the things that Ethereum meme coins did in 2021 in like the span of 10 days or like 3 days. Like on Solana, this literally happens in hours. It's absolutely crazy. And like then like if you also like you look at like the Jupiter DCA feature, where like you can down cost average into like literally any token for virtually free. It's like that also is like a huge part of transactions. If you look at the transaction history of like a lot of the like the meme coins on Dex Screener or like whatever you showed there earlier, Bird Eye, there's people literally like cheating or buying like coins via DCA, meme coins via DCA with like literal like $5 transactions, and then they just like every 10 seconds they'll like buy this coin. It's just mental. Like all the chart, like there's so many charts which just look like absolute, I don't know, it just doesn't make any sense. So like in general, even if you like take away the like transaction and like addresses part of Solana, which is also like weird, but you could solve that with like the signer transaction. So like it depends on the provider, like what they're actually counting, if it's like the actual accounts or if it's the signing transactions. But like even then, nothing of this makes any sense to compare. I think like in the end, it's always like the economical value. But then even if you look at DEX trades volume, it's like it's super hard. People are just like you can do so much for like so little amount of money. So it's like I don't think at the moment we have any reasonable like basis to even compare things anymore.
It's really hard to like just everything cross chain compare statistics.
Yeah.
And that's like a growing problem, like because it's like more and more things are spreading out across chains. I know I'm seeing more and more demand for like cross chain analytics, but it's hard. You can compare like like all super chains across one another because they're relatively on the same on the same level and comparable. But comparing Solana to Ethereum L1 is it's very hard because like the user doesn't pay as much and it just doesn't have the same value as you said.
Yeah, totally. Yeah, so Mert from Helios was calling out this chart, like it really doesn't make sense to compare number of transactions, neither the active addresses. Although I did see like Phantom Wallet, their official account posted about they reached the all-time high in terms of monthly active wallets. They said user, but I guess wallets. Unless they have a way to like maybe group by all the different, so I'm not sure if they're talking about actually wallets or maybe like UI wise tracking, because one person can have multiple wallets loaded into one device ID. But they posted that they've reached like a 4 million monthly active user all time high. So yeah, and along with all these like meme coin frenzy, like who is making the most money, which is I think the trading bot is like making shit ton of money, and like this Soul trading bot is one of the I guess like sniping bot. Whenever there's a new meme coin getting deployed, you always see there's a spike going up crazy in the beginning, which is usually because of the sniping. And like this is definitely the most profitable. How to say the period for you to make the the most gain, like because all the token, most of them they launch with like 90 in the digits, like before, like 0. Like considering the fee they're charging per swap, which is gonna time up like how to say like 200K per day for each of the bot. So this is like Soul trading bot, and in one day they're making like around 200K fee. And then I have this other chart dash from Whale Hunter. It's listing basically this how to say. I think this is BunkBot, and the per day fees also was like crazy in that just 1 week, and it's like 200K per day. And then like Banana Gun, they have both Ethereum volume and Solana volume. Actually, like when you compare here, it's like their Solana volume is quite small. So Banana Gun is quite big on Ethereum, but they're also available on Solana, but not really big on Solana. But yeah, times them all together, their total fee was also around like 300K, combining Ethereum and Solana in that week. Pretty crazy. And imagine what's the annual revenue for all these like team, like they, I would say, I think this is the most promising investment a VC can do, which is Telegram bots. And in the new bull cycle with all this like meme casino thing, well, I'm not justifying say, it's the greatest product, because it does have like private key security issue. Although I did talk to like Banana Gun team people in East Denver, and they are actually quite legitimate group of people, and they are actually like trying to design some AA wallets kind of like extension, so user can actually store their funds there without worrying about like giving out private key and etc. But I'm just saying that like this app will be the one that's making the most money in the bull round with all this retail meme crazy money. But also they're probably too rich to be invested. So yeah, it's really crazy. It definitely bring up all the Telegram bots usage and also the how to say overall fee. But I will say like there's a maybe not a twist, but there's a new development after all this, which is Jito, which is the MEV boost, basically, or like the Flashbots equivalent on Solana. Jito Labs, they posted an announcement like a few days ago about shutting down their service about providing the mempool. So for a how to say general context wise, searchers are using this mempool service to submit their transactions and potentially do sandwiching on Solana. So basically, pretty much I think the only MEV service on Solana now is basically shut down by the team themselves because of the negative externalities impacting users on Solana. And it looks like this decision is made in collaboration or like basically, by the order of Solana ecosystem stakeholders. So I would assume like Solana Foundation overall, or maybe a few other teams, they all felt like, the users are complaining about like high revert and bad UX in terms of this, high activity of meme coin and bots activity. So they, for the benefits of user, they shut this down. And it kind of caused a bunch of discussion in the beginning. Like the first reaction was like, you shutting down this service, other people can spin it up still. So is that really a good thing to do? But I think like one thing is their code base is private, so it's not going to be like anyone can just fork and spin it up. So it really is shutting down actually the only private mempool service on Solana. And I've also talked to like some Solana searcher, and they said now if you want to like sandwiching or like front running or whatever, you will have to like build your own private mempool. And you building the private mempool, you also need like to get enough adoption from validators, so to like take the transaction from mempool. So it will be much harder for people to do MEV on Solana. So yeah, I think it did serve its purpose. Like basically, it's kind of like winding down all the MEV activities. So another tweet here was like someone was talking about like during that week when you set a maximum slippage of your trade, it's gonna be your expected slippage because there's crazy MEV bots activity going on there. So yeah, that's basically the rule of how to casino on Solana. And yeah, there
Wait,
were
Denning, can we roll this back for us normal non-math people really quick?
Sure.
Like
Yeah.
in
Yeah.
actual terms, what was so Jito was providing me with a service to actually prevent MEV, right? They provided a private mempool so I could submit my transactions into that private mempool, and I was not being front run if I was using Jito services. So
Sorry. So I think it's actually like they are providing a whole basic like layer of like map boosting on Solana, and so where searcher can submit their bundle to the service and then land their transaction, which is basically allowing the searchers to sandwiching and making MEV activities. I
It's the
am
opposite
not
of what you're saying, Florian.
sorry.
It's the opposite of what Boxer was saying, where instead of now you can't sandwich anymore because this mempool isn't available anymore, and Solana doesn't have any public mempool in the first place, as far as I know,
Yeah,
right? I think that's the
yeah,
main reason why you don't have
yeah.
any mass
Okay,
sandwiching
but
happening.
why
Like,
is the so then G2 shut down because the Solana ecosystem was basically saying, hey, you guys are causing all of our traders to be sandwiched. But why in the aftermath of this is now my like why has the situation improved or hasn't it improved?
I believe user has been MEV'd less. Yes. Yeah,
Okay,
but
so
that
what was
only
this one tweet which was like, your like max slippage is your expected slippage now? Like, what's that about? Like
But yeah,
because like
that was before they shut down. Sorry. My timeline might be missed. Sorry.
Okay,
Yeah.
okay.
Yeah.
Now things make sense.
Yeah.
So basically,
Yeah.
if we translate this into normal people language, Jito was providing a service to like for searchers to submit bundles and basically made possible or like they provide the whole MEV pipeline for Solana or like big parts of the MEV pipeline. And now Jito has basically they had to step back and be like, oh shit, like what we are doing with the ecosystem in Solana, because like nobody has really like built up defenses against MEV yet. So all of our users are getting sandwiched to death, and that's like making a bad experience. And then like behind closed doors, there was some kind of agreement taken with like unknown players. Like we don't really know if the Solana Foundation was actually involved. Oh, that's actually that's quite spicy. Like G2 shutting down like the MEV pipeline for Solana because nobody has defenses for it. Okay, okay.
And so they are giving up like shit ton of revenue. And then
Yeah.
they, like by just providing a better user experience for Solana overall, and so it's for the longer term, better gameplay play out. But overall now, so there's no native mempool on Solana, and so searchers will not be able to really like easily like submitting transactions with guarantee or basically like revert cost. So now it will supposedly actually have much less MEV going on, or like the searching will be harder basically. So yeah, I think it's like net positive for the Solana ecosystem, but definitely like Jito is taking a big sacrifice in terms of whatever much money they can make. So yeah,
I think Jito, you can still though you can't sandwich anymore, but you can do all other types of arbitrage like atomic arbitrage. So where you use some you look at different pools and see where there's discrepancies and make money from there, and also statistical arbitrage where you look through different chains and different maybe on Binance and whatever and look at like arbitrage across there. So this is still possible. It's just sandwiches that aren't anymore. And the problem that I was told is like the code base is such a huge hurdle. It's like really, really hard to get there. It's not an easy to code thing. That it's just a heavy lift for anyone to go ahead out of their way and remake themselves. Yeah. And also, you would need to acquire, I think, a significant stake yourself in order for your pool to be used and therefore to have the ability to have all this chain activity.
Yeah, and then so like along with this whole shutting down Jito, there's also new chart crime come up. So people were like, oh, like the Jito thing was shutting down, and like Solana trading volume is down by 50%. So I guess this guy is trying to say, like, oh, all those Solana volume, most of them are just MEV activity, and now it's like gone or whatever. But like that's not true at all. So like we saw Murder was calling out this by showing that if you just compare this with Ethereum, it really just is market trend. Like it was really hyped up in terms of the volume in that past week, but now it's like winding down across all the markets. But then they were just taking the Solana one and making the connection with the Jito thing, but not really when you look at things in scale. So it was quite funny as well.
That is, I think, the worst chart crime we've seen so far.
Yeah.
That is like an actual that is a crime. Like that's such a misrepresentation of what was happening.
Yeah.
Wow.
This one is saying, look at what happens to Solana volume when just one of their clients removed a malicious MEV, down over 50%. So well, there's still plenty of bad MEV occurring on chain. So Solana user, you have no clue how much being stolen from them. So it's saying like, oh, the volume are all MEV, and basically you're getting wrecked so bad when you're trading on Solana. So like it's super bearish, but it's a fraud. This chart is a chart crime. So yeah, same thing. Like it's actually the market going down overall. So yeah, that's like a recap of what happened in past week on Solana Memecoin. And I had like a trader friend who made a lot like in 2021 on trading on Memecoin on Ethereum, and he made a comment that like it's basically the same cycle of shitcoin going on, but this time the gas is free, on Solana. So I'm excited to also see like how I've seen also some positive comments about why meme coin actually has its value, as in like, in the past, there's no way for any like subculture to just like easily launch as currency and like having this magnitude of like impact in terms of like in the financial side. So I don't know if that's a legit enough or like convincing enough comments, but I'm excited to see how the meme coin thing play out in the new cycle. Yeah.
Solana seems to be finding like its own like user base, which seems very distinct from the Ethereum one. That like there has been some degen activity on Ethereum, but it seems to come in waves. This is probably just a wave. I don't know. We'll see how Solana goes on the long term, but so far it seems more sticky there. The whole degen activity, and if you look at like you were saying like earlier, the top trending like tokens are seem much more degen heavy, at least for the time being. So we'll see if this sticks around, but maybe it is, the meme coin chain as one of its big usage relative to other chains. Maybe that's like one of the big things that distinguishes it. It's an interesting like development, I think, and we definitely like, whether people like it or not, like meme coins are here to stay, and people want to trade them. So it's not like I don't think it's actually as stupid as people may think in the first place. It's just internet culture, and that's like the core of it. Even if you look at like, I was looking at like CoinMarketCap, and Doge is like bigger than Avalanche, and it's about to overtake Cardano as like number 8. And then Shiba is like number 11th and about to overtake Avalanche, which is like if you look at like all cryptos we've ever heard of, like 2 of the biggest ones are number 9 and 11 right now, which is, there's some substance to it, right? Yeah. Pepe is probably not too far behind either. I don't know. I haven't looked closely lately.
Yeah, I definitely also see myself having a different behavioral preference in terms of like trading on Solana versus trading on Ethereum. Like trading on Ethereum for one transaction, it's gonna be like what at a peak time still gonna be like $20 or $30 sometimes. And when I was trying to sell my Pepe, I think, but like on Solana, like each transaction will be just a few cents. So I'm like, okay to split it into 10 transactions. Which is another point to prove that number of transactions is not a great metrics because, like it's so much cheaper. So probably need to consider the basis cost. So yeah, but also I think the post effect of this gambling experience is that I like put a bunch of those gains into Bitcoin, and Bitcoin went up from like 68 to 72 like in a day, and my total didn't really change much, and I was like, this is not good enough. Like,
this is too boring. Give me my dopamine.
$100, and like I needed the 3x or 4x in 2 hours. So nothing.
On what you were saying at the beginning, it'd be interesting actually to look into like the transaction to active addresses ratio across chains, and I'm guessing it's higher on like Solana relative to Ethereum. Those would be like interesting metrics to use to adjust, other metrics, I guess. That could be cool research to do on.
Yeah,
that sounds interesting. I think on the Solana point, I just want to say that the UX is like super clean, and I think the Phantom team has done an absolutely fantastic job of building their wallet. I haven't tried any other wallet for Solana, so I don't know like how they're squaring up. But like the mobile wallet and the like in desktop browser wallet, however you call that, they're both amazing. So like I like if I wanted to recommend my friends to like meme coin trade on anything, like I would not send them to Base. I would send them to like download Phantom on your phone and just trade from Phantom on your phone. It's so much easier. So like I'm even like a little bit confused why like there's even like Telegram bots for Solana, because like the mobile experience is or like the general like experience of trading on Solana is already so clean. Like you don't have like the approval patterns and like all of this like frankly bullshit that we have on Ethereum nowadays, which only will be abstracted away with like smart account wallets, which are supposedly around the corner for like a year now, but like they're not really finding the adoption. So like it's kind of interesting how the Ethereum ecosystem is like behind in UX, but they're trying to catch up now, or like not trying to catch up, but like a lot of this will be abstracted away once we have proper smart account wallets, because then you don't need to like have these approval patterns and like all of this stuff anymore, but rather like we'll just trade with intent. So yeah, we will see where all of this ends up, but for now, like I think like all of this like meme coin trading on Solana just happened. Like it's cheap, like transactions are virtually free, and the UX is just 100 times nicer. So like I'm absolutely not surprised that meme coins have found their home on Solana, and like we'll see how much of the meme coin capital over time flows to Solana, but I'm absolutely not surprised.
Yeah, and Phantom probably also is making like pretty good revenue. Initially I was just swapping within the wallet, and until the point I realized there is a 85 bips fee on swapping on Phantom wallet, and but it was quite smooth. So, but yeah,
if you were making like a 2 or 3x like in 3 hours, like you don't fucking care about the 85 bips fee.
Yeah,
and I think like that's even like why MetaMask can keep their fees so high. Like it's just like people are using the in-app or like in-wallet swap functions. Like they're not they're not like I'm gonna invest in Bitcoin and like I'm gonna look at this in a year again. They're
just
people,
easier UX.
Yeah, and they're the people who are hunting the 5x or the 10x or the 100x. They're in the casino. They're not the long-term value investors.
Not in the trenches.
Yep.
So yeah, with that, I think we've covered both sides of this market beautifully. The TradFi side, where there's the institutional investors, and we're seeing a lot of inflows from. It's actually a good question of like whether retail is participating in the ETFs or it's more like companies or like organizations onboarding or like buying Bitcoin. And I don't think the on-chain data really tells us much there. So like I guess we'll need to wait for the quarterly report of BlackRock for them to tell us who's actually buying Bitcoin. That's actually like that will actually
that would be interesting. Actually, that's a really good point.
So we can't really tell what's happening, but like I think the words on the street is definitely it's more institutional money, and then that kind of drives the whole meme coin frenzy, because Bitcoin is going up, crypto is getting attention, and then people are trying to participate in this casino, and the casino is currently spinning the fastest on Solana, with a lot of meme coins which have taken very odd shapes, from Geo Bowden to Andrew Tate, and whatever all of those coins are. So I think I think it's like you can kind of assess the stage of the cycle very well with like the degeneracy of the memes. And I think we're getting into like a state of like there's like a lot of like very weird things, at least that is like it's getting pretty degenerate out there. Like I'm hearing a lot of weird stories, but always remember what goes up must come down. That's like if you look at a lot of those meme coin charts, you can buy them and they can make a 10x in a few hours, but they can also just be worth like a tenth of whatever you've bought them for. I was reminded of that last week a lot. I did some bad trades, but it is what it is. And I think like any final comments for this episode?
Will be interesting to see the quarterly reports of those ETF futures and see who's using those, and also how like Solana usage, especially because I think the Jito thing, we can't really look into the data now and see how it is impacted, but in a few weeks, maybe we'll see how things have changed. And also, is there going to be some novel way to sandwich, and what is that going to be? It's like the first time that out of any blockchain we had MEV and we have no longer any MEV, and there is value to extract. There is an incentive to go out of your way to try to rebuild the system. I'm curious to see how that plays out in the long term.
Yep. And as we're recording this, Blobs, so EIP 44 went live a couple hours ago, and we are gonna have a very special guest to talk about this in our next episode. So be excited for that, because blobs are all the rage for the next few weeks, I would say. With that, thank you for listening. As always, we are looking forward to your feedback. This has been a really good and interesting episode, I feel like. So thank you guys for this. And see you all in 2 weeks, 1 week. We'll see when we actually record the next episode. Bye-bye.
All right. Bye. See you all.